Welcome back to the channel, everyone. Today we set a new record for dark pool activity in the AMC stock. Today, 67.7% of all trades were performed in the dark pool, which are private exchanges. But what does this mean for the AMC stock? Trust me guys, you do not want to miss this video, so stay tuned and let's make some money. But before I dive into the video, I just want to give a massive shout out to the 1,300 of you that have currently dinged that notification bell, because you guys are always the first to watch a new video as soon as it's released. So guys, be sure to drop a like down below, subscribe to the channel and ding that notification bell if you haven't already, so that you don't miss another video just like this one. And now I want to dive straight in with the key information. So, this is obviously a different source, but Market Charmeleon is saying that AMC dark pool trades reported for AMC have accounted for 69% of the total volume today. Over the past 20 days, the average dark pool volume has been 61%. Total volume in the dark pool is 35.5 million shares. The volume weighted average price for the dark pool trades is $43.66. From Stonko Tracker, we can see the average percentage of dark pool trades over the last month or so has been around 62, 60, 59, 55%. So obviously 69% or 67%, depending on which source it is a massive increase from that average. Also from Stonko Tracker, we can see that a very large portion of total trades in the dark pool are shorts. Considering the estimated short interest on Ortex at the moment is only 20%, the dark pool is regularly seeing 50% of all trades being shorts. So what are dark pool trades and how does it affect the AMC stock? Well, dark pools are private exchanges for trading securities that are not accessible by the investing public, also known as dark pools of liquidity. The name of these exchanges is a reference to their complete lack of transparency. Dark pools came about primarily to facilitate block trading by institutional investors who did not wish to impact the markets with their large orders and obtain adverse prices for their trades. That right off the bat already just sounds so sketchy. Basically, they didn't want to impact the stock price when they had to buy up tons and tons of stock, so they just do it off exchange when no one can see and no one knows about it, so that it doesn't push the stock price up. Shorts could currently be trying to cover tons and tons of their short positions, but because they're doing it in the dark pool, it doesn't impact the AMC price because it's not on a regulated exchange. Dark pools are sometimes cast in an unfavourable light, but in reality, they serve a purpose. However, their lack of transparency makes them vulnerable to potential conflict of interest by their owners and predatory trading practices by some high-frequency traders. I imagine it's very, very easy to misreport trades in the dark pool and therefore very easy to engage in the practice of naked short selling or just racking up failed deliver positions. According to the most recent SEC data, there were 59 registered alternative trading systems, aka dark pools, with the SEC as of May 2021. Honestly, it wouldn't surprise me if there's a lot more unregistered dark pools that the SEC currently aren't aware of and aren't regulating. The rationale for dark pools. Dark pools emerged in the late 1980s. Non-exchange trading has recently become more popular in the US. Estimates show that it accounted for approximately 40% of all US stock trades in 2017, compared with an estimated 16% in 2010. Well, that's currently got nothing on AMC, which is seeing 67% of its trades currently being performed through dark pools. So why did dark pools come into existence? Consider the options available to a large institutional investor who wanted to sell 1 million shares of XYZ stock before the advent of non-exchange trading. This investor could either work the order through a floor trader over the course of 1 or 2 days and hope for a decent price, split the order up into, for example, 5 pieces and sell 200,000 shares per day, or sell small amounts until a large buyer could be found who is willing to take up the full amount of the remaining shares. The market impact of a sale of 1 million XYZ shares could still be sizable, regardless of which option the investor chose, since it was not possible to keep the identity or intention of the investor secret in the stock exchange transaction. With options 2 and 3, the risk of a decline in the period while the investor was waiting to sell the remaining shares was also significant. Dark pools were one solution to these issues. But personally, I don't really think that these are issues. These are just impacts of having a much larger account size where you can't sell off your entire position in one go. Or if you did want to sell off your entire position, it would obviously impact the stock and either push it up or down. But that's not really your problem. It's, I guess, your fault for buying that many shares and having that much money. I don't really think this is a problem that needs resolving. Just either take the price hit or sell your shares over a longer period of time. You can't just decide to go off exchange and off regulation and do whatever you please. Why use a dark pool? Contrast this with the present day solution where an institutional investor can use a dark pool to sell a 1 million share block. The lack of transparency actually works in the institutional investor's favour since it may result in a better realised price than if the sale was executed on an exchange, such as trying to avoid a short squeeze and avoid getting yourself liquidated just because you're shorting a stock that you shouldn't really be shorting. Important to note that as dark pool participants do not disclose their trading intention to the exchange before execution, there is no order book visible to the public. Trade execution details are only released to the consolidated tape after a delay, and providing that you don't misreport your trade. The article then goes through different types of dark pools and advantages and disadvantages of dark pools, so I'll be sure to link the article down in the description if you fancy a read. Regulating dark pools. The recent high-frequency trading controversy has drawn significant regulatory attention to dark pools. Regulators have generally viewed dark pools with suspicion because of their lack of transparency. This controversy may lead to renewed efforts to curb their appeal. One measure that may help exchanges reclaim market share from dark pools and other off-exchange venues could be a pilot proposal from the SEC to introduce a trade at rule. The rule would require brokerages to send client trades to exchanges rather than dark pools unless they can execute the trades at a meaningfully better price than that available in the public market. If implemented, this rule could present a serious challenge to the long-term viability of dark pools. I personally think that's a great idea, and I do think dark pools either need to be much more heavily regulated or just removed entirely, and all people should trade on an exchange, whether you're an institutional investor or a retail trader. It can't really be one rule for them and another rule for us. In terms of how this is impacting the AMC stock, hedge funds could obviously be buying lots of AMC shares to cover their disastrous short positions, but we're not benefiting from it because it doesn't go through directly through the exchange and doesn't impact the AMC price. Again, this is just another sneaky way for hedge funds to avoid reporting their trades properly and avoid impacting the AMC price, causing a squeeze. Hopefully the SEC or someone starts to take note of the AMC dark pool activity, considering it's reaching such all-time highs. Something I do think that's great to see is Adam Aron's celebration of this weekend. Black Widow opened big, and several more hit movies are also in theatres. AMC showed UFC's Poirier McGregor 3, so AMC set yet another post-reopening attendance record this weekend of more than 2.5 million US guests and approximately 3.2 million guests globally. Again, it's not only great to see AMC doing well, but also great to see Adam Aron getting on board as a CEO and enjoying the success of his company, and hopefully taking notice of the success that the apes have brought him with the suggestion of AMC/UFC. Guys, if you haven't already, consider checking out the Patreon, linked in the description below, to become part of the team and to discuss due diligence and news stories like this on AMC before I even make a video. Also, if you want to pick up some shares in AMC, but you haven't even yet signed up to a trading broker, be sure to check out the links down in the description below to Webull if you're in the US, or Free Trade if you're in the UK, to get some free shares with very low minimum deposits. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!